Good morning, all of you, and I'm delighted to have you all here as we explore critical key driver for IPO readiness, that the strategic use of the employee stock option plan. So, as company prepare to go public, it's just not about the financial metrics and the regulatory checklist, but also about the building culture of ownership, aligning leadership role with the company's vision, and most important, make them understand, like from founders to employee, their actual role in value creation. So today we'll dive into how ESOP can be thoughtfully designed to retain the top talent and drive performance, also foster sense of shared purpose. We'll also discuss about some Indian and global perspective with respect to the ESOP implementation pre-IPO. We'll talk about how ESOPs evolves from private to going public. Uh, After that, we will discuss the pre-IPO foundation, how we can strategize the ESOP policy, how we can formulate the effective ESOP policy, and also designing the executive compensation with respect to the achievement of corporate objectives. After that, we'll also navigate you through the IPO transition, so how we have to keep in mind certain points and the key parameters while going from private to public with respect to the ESOP scheme and what are the disclosures required. And post that, we'll also discuss about some common pitfalls and challenges that company may face, and also a few concerns from the employee perspective that they may have during the IPO transition and while generating their wealth through IPO. Post that, we will also discuss the effective employee communication through which we can mitigate the concerns from the employee side. And after that, lastly, we'll discuss how we can unlock the value and how the value is unlocked once the IPO is executed by the company. So talking about the Indian context, recent years, we have seen a great encouraging shift in the trend that while base salary have remained steady, whereas employee wealth creation has reached to the remarkable new heights. This is because the significant portion growth of ESOPs like reward in the compensation structure. So this is recognized as a powerful tool for financial empowerment and long-term value creation. It also reflects that it is a deeper understanding of wealth creation in high growth companies. And with the data points, we can understand that in FY24, 2000 plus crores value has been generated from the ESOP liquidity events, which is a broader transformation in Indian startup ecosystem. And in line with the previous year in FY25, the market is continued with its enthusiasm, with over 30 plus companies has filing for an IPO in the first half alone. And there's a strong narrative has emerged that ESOP is now becoming a key driver for a successful culture and positive, optimistic approach in the companies for going public listing. So all in all, we can say that ESOP is just not a tool for reward and retention, but a strategy to actually create a culture of ownership, and most important, sharing the success of the company with the people who are actually contributing or building it. So we have understand the Indian context. Now I ask Saloni to provide us some brief on the global context as well.
Yeah, sure, Aditya. So, as Aditya provided an overview of the Indian landscape of equity compensation, let's now explore how global markets approach equity liquidity and how that compares with the Indian IPO ecosystem. So, in 2024, the global IPO market recorded 1,200 deals, raising 121 billion USD, modestly down from 2023, but still robust. So, notably, for the first time, India led globally in IPO volume, with approx 330 listings, notably outpacing the United States and Europe. So, this is huge. So, this rise in IPO activity mirrors India's increasingly active pre-IPO ESOP landscape in 2024 and 25. Startups executed over 1,400 crores in ESOP buybacks for more than 3,000 employees. Thus, India's pre-IPO ESOP surge coupled with record IPO volumes signals a maturing startup ecosystem where employees' wealth creation and equity participation are central to pre-IPO success. So, with this, now we have understood that how the global and Indian perspective and how the markets are evolving when it comes to the IPO part. So let's now explore how ESOPs evolve as a company transitions from private to public, shifting from a tool to retention to a mechanism for a real ownership and liquidity. So the journey from a private company to a listed entity is much more than a financial shift. So it is a strategic and cultural transformation for any company. So in the pre-IPO stage, ESOPs are primarily designed to attract and retain key leadership. So alignment of senior talent to long-term goals of the company and to reward those employees who have contributed significant to the company's growth trajectory, basically. So, the true effectiveness of any pre IPO ESOP plan lies in its ability to balance shareholders' expectations and communicate the company's long term vision of shared success. So, this is how a company kind of creates that environment for employees, that you are not just an employee of the company, you are going to become the shareholder of the company, you are going to share the success of the company, basically. So once the company is listed, the dynamic shift significantly. So now employees hold tradable shares and the focus moves from potential ownership to active shareholder engagement. So this is a complete excitement for the employees, that the excitement of liquidity brings along new responsibilities. So it is a very obvious thing that along with the rewards, new responsibilities will come to you, including understanding market movements, managing tax implications, and adhering to trading and disclosure norms laid down by the regulatory authorities. So it is very important that we are in compliance with whatever the regulatory authorities are telling us to do. So this transition requires more than a financial awareness. So it calls for a continuous education and communication. So many companies we have shown proactive employee engagement, and during and pre and post listing we have seen this, that pre and post listing communication have helped companies build long-term confidence and trust among employees. Okay, so this is how we have understood that companies who are educating their employees on a timely basis, they are making them understand that what we are going to implement, how ESOPs will work, and how the whole process will reward them with whatever benefit they are going to get in future. So this is very important stage to educate employees. Now, so that was a quick overview of how companies transition from private to public and how that shift impacts both the company and employee perspectives. So, to effectively manage this transformation, it is crucial to have a well designed ESOP scheme in place. The first important thing is to have a well designed ESOP scheme. So, what the ESOP scheme will balance? So, it will balance corporate governance, shareholders' expectations, and most importantly, wealth creation and value creation for their employees. So, this is about the transition part. So, Aditya, please apprise us on how the companies can build an effective ESOP plan, and like what are the important parameters that are required to be kept in mind when designing an ESOP plan. Over to you, Aditya.
Yeah, sure, Saloni. So basically, while formulating an effective ESOP policy and to evolve very in a very smooth manner from private to public, we need to have a strong governance and compliance to form a foundation of a successful IPO. So basically, with this, we need to evolve our ESOP framework accordingly from a startup centric incentive model to a mature, transparent, and performance driven strategy that aligns with the regulatory standard as well as align with the shareholder interest. So, as we all know that in pre-IPO stage, there's no SEBI regulations is implied on the company, but the Companies Act is govern the ESOP scheme and the policies. So, in the pre-IPO stage, we need to adhere the regulations of the Companies Act rules, and once we file the DRHP, then we have to also comply with the SEBI, SBB, and SE regulations as well. So this regulatory transitions require careful planning, updating plan terms, updating disclosures, and updating valuation techniques as well. So with this, we can say that compliance is not a one-time exercise, but is an ongoing process to gain the investor confidence and increase the organization credibility. So we have discussed that strong governance plays a very important role, but we still need to define some key parameters in the ESOP scheme that should be transparent to the regulators, to the shareholder, and also communicate employees that what exactly they are getting in how much time and at what price. So what are the key scheme parameters that we should clearly define in the ESOP scheme, and we need very specific language to that. So first key scheme parameter is the vesting period. So we need to define the set limit within which employee has to be with the company and to get their options vest and get their right to exercise once it is vested. So this is the period where the employee will be associated with the company and perform and get the right to exercise those options. Now we'll talk about vesting conditions. So vesting condition is definitely one of the key criteria for a swap scheme, where the company should look at how they are foreseeing the company's growth in next to 4 or 5 years and align the company's objective with the individual objectives, with the attraction to the ESOP scheme, and set the performance condition, whether it will be time bound, whether it will be performance driven. So accordingly, you have to define the vesting condition clearly, what exactly employee needs to do to get the options vested. The third parameters for effective ESOP scheme is the exercise price. So this exercise price also need to define that whether it will be beneficial for shareholder interest, because we shareholder doesn't want employee to get in deep discount the ESOPs. So we need to keep in mind what are the shareholder expectation, what is more attractive for the employees, and also the impact in the books of accounts in terms of the accounting cost. So this is one of the major key scheme parameters we need to keep in mind while formulating the effective ESOP scheme. And the last is the exercise period. So the exercise period is nothing but a reasonable time we provide to employee wherein he can exercise those options and convert into shares and become the shareholder of the company. So these are the key scheme parameters we need to define very clearly in the ESOP scheme. Now the second parameter we need to be very careful on that is the option pool sizing. So this is the total dilution in the ESOP scheme, which the shareholder looks at how much dilution they are going to do for the ESOP scheme. So there should be a balance between the talent attraction and addition and managing the shareholder dilutions. How we can do the option pool sizing? We can also go with the benchmarking, what industries are doing, and also operational planning can also play a picture while deciding the option pool. So it is to be clearly mentioned the number of total options in the ESOP scheme, how much we're going to dilute, and show the transparent picture to the shareholder with respect to the ESOP scheme during the IPO transition. The last is the employee eligibility. So while identify the eligible employee to participate in the ESOP scheme, we have also need to be considered the statutory exclusions as per the Companies Act. So we know that the promoters and the significant shareholders, that is more than 10%, cannot be part of the ESOP scheme. So we need to identify those individuals who can be a key drivers but not covered under the statutory exclusions. So all in all, we can say that focus on creating a robust and compliant ESOP scheme that definitely aligns with the long-term company goals and prepares for a public listing. So we have understand that how we can create effective ESOP policy and the key scheme parameters. So now let's discuss the compensation structure, what we can design and how we can design the compensation structure to get this ESOP scheme to be effective. Saloni, over to you.
I totally agree with you that this is the most important stage of any ESOP implementation, that we have to design all the parameters and we have to fix certain criteria as well. So we have understood the key elements of designing a compliant and effective ESOP scheme. So now let's move on to how equities compensation can be strategically structured for key employees. So in my opinion, the goal is not just to reward performance but also to drive long term value creation and sustainable growth for the company. So employees and the company goes in line, goes parallelly so that the employees also getting rewards, and in return the company is growing. So for that purpose, what companies basically do, so for senior leadership, ESOPs must not act merely as a retention mechanism. They should be closely tied to clear performance vesting conditions that reflect both individual contribution and broader organizational success. So, what equity should be allocated to those who have played a meaningful role in driving the company's growth. So, this is very important because the company is at the stage where it is going for the listing. It is the biggest milestone for any company, the IPO stage. So, what it ensures that employees are rewarded not just with the recognition, but with the tangible stake in the value they help create. So moreover, we have also seen with in our experience, and it is also highlighted in Qapita's 2025 survey, a significant shift is underway. So ESOPs are evolving from exclusive to senior leadership towards broader participation across organizational levels. So earlier, what the mindset was, the company included the senior leadership who were, on the driving seat of the company. But now the shift has changed. The companies are also including the middle and junior level because they are the foundation of any company that builds the company by supporting their smaller roles. Okay. Now, so companies are increasingly keen to, extend equity ownership to middle and junior level employees. So recognizing them as the foundation, as I mentioned earlier. So this inclusive approach not only strengthens employee engagement, but also reinforces a culture of shared ownership and long-term value creation for them in future when they'll be having the full vesting of options with them, and they will become the ultimate shareholders of the company. So now, as we discussed that how the company can align the growth of the company with the reward that the employees will be getting in future. So for that purpose, performance-based vesting. So vesting can be strategically tied to measurable performance outcomes of the company. Okay. So ensuring that equity rewards are aligned with both individual and corporate targets. So this approach motivates employees to contribute meaningfully towards key business goals. So, performance conditions for ESOP vesting can be linked to individual and corporate targets. Okay. So, for individual performance, this may include, let's say, KRAs or the performance ratings, or any other role-specific metrics that reflect an employee's contribution to the company. So, how individually he is contributing to the company. So, that can be one individual target that can be linked to the vesting of options. So this is one thing. Now, coming to the corporate performance targets. So they are categorized, for instance, let's say financial metrics. So vesting can be linked to targets such as revenue growth targets, EBITDA targets, profitability, and cash flow improvements of the company. So these metrics reflect, the financial health of the company and operational efficiency of the company. So let's say if the revenue targets are met, the company, what we think that the company is doing good. Okay. And who are behind that success of the company? The employees of the company. So on achievement of these targets, employees will be getting the options. So as simple as that, you perform for the company, you will get shares of the company. So this is how the performance based vesting actually works. Now, another milestone can be, that companies may also tie vesting goals like successful product launches, entry into new markets, achieving customer acquisition targets, or hitting technology development milestones. So, let's say a company is, working very hard to launch a product that they can crash the market, and it will be a very big success for the company. So upon achievement of particular that product launch, the company may tie that success with the vesting. So all the people behind that particular success will be getting options. So this is another strategic milestone that the company can tie with the vesting part. Now, the third milestone, so IPO milestone. So as I mentioned that for completion of an IPO is a very big event for any company. It's not just a financial moment, it's an emotional one, that our company has reached such a level that we are going to be listed. So for any company, it's a very huge like time that any employee can understand or feel that way. So the completion of an IPO can serve as a vesting trigger for ESOPs. So companies reach a certain stage of growth and expansion, that going public becomes a pivotal milestone. So marking not just financial maturity, but a strategic shift, I can say. So time vesting to this event helps align employee rewards with the company's long-term vision and success. So this is the performance based criteria that the company can attach to the vesting of options. Now coming to structuring pay with equity alignment. So what companies are doing is a significant equity component in the compensation package helps foster an ownership mindset among key employees. Now, what it helps, so it aligns the interest with the long term success of the company and creating a deeper commitment to value creation. So let's say people have shares with them, we deal in shares, we trade in shares. So what is our mindset when the AGM, when the company conducts an AGM? So what we think, so we are the owners of the company, we have shares of the company. So that mindset change from the employees perspective, okay, we are the owners of the company. So companies often adopt a differentiated approach to equity issuance based on employee tenure and seniority. So this is for different levels. The company can decide like at what level they have to attach a certain performance-based condition, and at a senior level what vesting can be done. So it is again companies perspective how to design the particular ESOP plan for the category of employees. Now coming to what next company does basically is that they go with a mix of instruments. Now there are three kinds of instrument that a company may go with. The first is the face value issuance, the second is fair market value issuance, and third is the discounted issuance. So for the face value issuance for senior employees or the employees who have stayed with the company for a very long period of time and they have contributed to the growth of the company. So what company thinks that these employees are the most eligible to get the shares of the company at a bare minimum price, that is the face value of the company, for their loyalty towards the company. So in this manner company can design face valuations for that category of employees. Now, coming to the fair market value issuance. So, for newer employees who have just joined with the company and for the broader participation, shares may be issued at a fair market value. So, what this approach basically ensures? So, it ensures transparency with external shareholders. So, what shareholders will think? Okay, so they are getting the shares at the current market price of the company. So it is very transparent for us and from the proxies view as well, that okay, they're getting at a fair market value. So we are fine with it. So so in this manner, so they don't link with the success and the contribution they have made. They are just getting the shares that they'll be becoming the shareholders of the company in future. Now coming to the discounted issuance. So in some cases, company may offer shares at a reasonable discount to the fair market value. So what this helps? So making equity more accessible to employees while still maintaining fairness and alignment with market expectations. So it also reduces the financial burden on employees, making participation more attractive. So what an employee will think, okay, I'm getting at a discount, decent discount from the market, I'm still in the money. So this is the thinking and the thought process behind every issuance that the company may consider for issuance of stock options. Now, coming to the fourth point, that is the long-term focus and governance. So, what companies generally do, they use extended vesting schedules post-listing. So, in this manner, pre-listing they were associated with the company. They got ESOPs, and now the company is listed. And post IPO, still certain percentage of vesting is also there, so that this still stay with the company for a period of time that the retention objective is achieved. So it also discourages the short term behavior by the employee, that they don't want to uh, uh, get that instant benefit and leave the company. So what companies do, they use extended vesting schedules. Now, to keep in line and to be very transparent with what people are doing in the industry and what other companies are doing, so the committee, the NRC committee, is empowered to review timely the vesting conditions and pay structures to ensure that they're aligned with current market practices. Okay, so what they review, that okay, this is the targets, are they are in line with the industry, what people are doing. So it can be done with the benchmarking part, comparing peer companies with them, what peers are doing basically. So it is a very helpful step in ESOP implementation when we are benchmarking our plan with others. Okay. Now, this helps ensure that the ESOP framework continues to support both company objectives and employee interest. In this manner, both the objectives are achieved. Now, fifth part, second of this thing is navigating the IPO transition and disclosures. Very important, because your company is now unlisted and it's going to be listed in future. So, what are the transition requirements for pre-IPO schemes? Okay. Now, the company has to ensure that the ESOP scheme complies with SEBI, SBB, and SE regulations 2021. So, this is applicable for the ESOP issuance. Now, so post IPO, what the company is required to do? So, the company is required for to go for the scheme ratification, that is mandatory post IPO. Okay. So, the company cannot do fresh grants under pre IPO scheme unless it is ratified by the shareholders post IPO. Okay, so this is very important, because the company has to take, if the company has taken approval from the shares pre IPO, it has to go again to the shareholders to get the approval for the ESOP issuance. Now, most important thing here to note in today's Indian context is, so currently we have seen in Indian context, it has become a proxy sensitive environment where major decision making for shareholders come from proxy views. Okay. So in that case, a company has to make proper disclosures with respect to exercise price, vesting criteria, and other related disclosures as per SEBI, SBB regulations and proxy expectations. So, in this manner, the companies are required to design ESOP scheme in such a manner that it aligns with proxy views, shareholders' expectations, and adds to the wealth creation of employees. Okay, so this is the whole thought behind creating any ESOP plan for any company that is going to be listed in future. So these are the requirements that the company is required to do. So we have understood that what are the governance requirements, how the company can link the performance conditions with the vesting part, Indian context, global context. Now we are moving forward with what are the challenges that the company may face during this transition, and what are the concerns the employee may raise during this period, because obviously the beneficiaries are the employees of the company. Okay, and the company is in at the obligatory position to deliver the benefit and also maintaining the growth of the company by attaching the vesting conditions with the performance metrics. So now, Aditya, you can let us know that what are the key challenges and employee concerns.
Yeah, sure, Saloni. So basically, we have defined the effective ESOP scheme and the parameters which we use to formulate the ESOP policy for a pre-IPO stage. So, and also we have discussed the executive compensation, how we can derive or align the best matrix for the executive compensation. But still, there are some inherent challenges or the concerns that the company may have while transiting from private to public and implementing the ESOP scheme in this stage. So the first and foremost challenge the company may have is the valuation alignment. So we all know that in the pre-IPO stage, private companies grant ESOPs based on the internal valuations. So which can be different from parameters to parameters, and which can be of a different view from employee to employee as well. So, and post IPO, the market determined the price. So, which may lead to mismatch in the perceived value and may require recalibration for the future grants. So, we need to align the valuation in such a way that it not impact the employee, or also from the company's perspective, it should be fruitful for the employees as well as for the company. The second challenge the company may have is the compliance and the governance. So we know that under the Companies Act, there's a lesser compliance required for the purpose of ESOP scheme. But once we are going for a IPO and we need to adhere the guidelines of the SEBI and stock exchange, so there's a more strict regulation we need to follow. The company need to follow the stock exchange norms, the shareholder approvals, and the insider trading norms, which may require your ESOP plan to be redesigned in such a way that it should be aligned with the regulatory standards. The third challenge that the company may have is the dilution management. So we have already discussed in these key scheme parameters that the shareholder always look up to what the dilution they can have in terms of the ESOPs. So there should be a balance, but sometimes the company may not strike a balance between the talent retention and the shareholder interest. So these are the challenges where the company may face from the shareholder, that what the dilution that the company may look for the purpose of ESOPs. The last is the strategic repositioning. So we all know that pre-IPO ESOP is just being used as a pure retention tool, but post-IPO it should be used as a performance-driven structure where a sustained value creation should only be rewarded and aligned with the shareholder interest. Now we have discussed the company's perspective and the challenges that the company may have. Now we will discuss what are the employees' concerns and the uh, questions or queries from the employee side that they may have during this transition phase and during exercise of options and during liquidating their ESOPs. So the first is the liquidity and taxation. So we know that IPO offers liquidity to employees, but also introduces the tax complexities. So during this time, employee needs some guidance on tax planning, managing their gains, and also to understand what are the insider trading norms, how lock-in period has been imposed to them, in which window they can trade or they cannot trade. So these are the some concerns or the queries employee can have during exercise of options during the IPO. The second is the value realization. So this is again a critical queries from the employee side, that suppose the IPO price differs from the exercise price. Maybe at that time, the exercise of options may not be fruitful for the employee. So the company's clear communication may play an important role in this value realization, because the company needs to communicate that today the exercise of options may not be fruitful or may not be beneficial for you, but it is a long-term benefit which is given to you and may create a great wealth for you in the future. So they may hold on to it and exercise or realize their actual value in the future. The third is the cultural shift. So we know that pre-IPO, there's some different environment the employee is working under with, and post-IPO, it is a very structured governance structure which company may need to follow. So to adapt employee the performance-driven and new equity dynamics, there's a cultural shift for the employee, and also to become a shareholder of the company from a just an employee of the company to become the shareholder of the company. It is a very major cultural shift for them. So this is one of the major concerns, that how they can adapt and what are the new dynamics for the company and what are the new governance structure the company has put in place to actually run the company and achieve these certain objectives. The last is the need for education. So sometimes there's no FAQs available, or there's no forum available where employee can actually ask their queries. So we need to define, or we need to formulate such forums, or going for time to time sessions, technical sessions or employee sessions, to actually educate them what are their actual queries and how we can counter them. So these are the some common challenges and the workforce concerns that the company may have during the ESOP transitions or IPO transitions. So now we will discuss how we can mitigate those concerns from the employee perspective by doing a effective employee communications. So I think Saloni has some views on the employee communication. I request Saloni to provide us her view on the effective employee communication.
Yeah, sure, Aditya. I totally agree with you that for we have also seen with our experience that to many companies, for many employees, this ESOP concept is totally new for them. So they don't understand what is vesting, what is the exercise price, how much exercise period will be there, when they can sell the options, when they can purchase the options, basically when they can uh, get the options on completion of certain vesting condition or like that. So, in this previous segment, we explored the key challenges and concerns raised by the employees. So, to effectively navigate those concerns and move forward with meaningful resolutions, establishing a strong and transparent employee communication strategy is very, very, very essential. So, it serves as the foundation for building trust, aligning expectations, and driving engagement throughout the ESOP journey. So we understand that this journey is not easy, basically, but it is always easy with a little education and a little help. So this transition from a private to a public listed company, and to address the challenges and uncertainties surrounding ESOPs, the organization must adopt a comprehensive employee communication, engagement, and education strategy. So what that includes, basically, so it includes hosting structured communication, communication sessions that simplify the IPO process. So what will be your position pre-IPO, what will be your position post-IPO, everything, and and to clarify the implications for equity holders, and to respond to common basic to very hard queries raised by the employee during this period. So the queries in what the queries will include, basically, so it will include valuation, liquidity, taxation incidents, and vesting. So this shift from holding, illiquid private options to liquid public equity is not just a financial, a shift or a milestone. It is an emotional one for many employees. That employees feel very personal that okay, the company is giving us the equity of the company. They want us to be the shareholders of the company. So it's an emotional one. So, for many employees, an IPO marks the first time their ownership becomes tangible. So earlier they might have the confusion. Okay, so we just have the options. We don't have the shares of the company now. But when the IPO hits, their mindset is clear, their thought process is clear. Okay, there is a market for us. We can trade shares now, we can sell shares now. So, this is how a company can help employees to understand and clear that confusion they have in their mind. Okay, so managing this phase with empathy, transparency, and consistency is very essential. So, clear communication before and after listing helps employees to understand the practical aspects of equity, including exercise procedures, lock in requirements, the trading restrictions, if any. So, continued engagement is very, very important, and it can be, dealt with ESOP help desk. So, any, particular team is there who is answering the queries or concerns raised by the employees. So, any team is there, any committee is there, so FAQ documents will help. So we providing them with the, from basic to conditions that are applicable to them, what are the internal training sessions that can help them. So that will ensure employees remain informed, confident, and compliant every time. Okay, so companies that get this right foster a strong sense of belongingness, enabling employees to see themselves not merely as recipients of financial upside, but as a long-term shareholders invested in the company's growth journey. So this is very important because the beneficiaries are the employees of the company, and if they remain uninformed, and if they have confusions in their mind, the ESOP plan will not become a successful ESOP plan. That we see in the news these days that, okay, the on listing, the ESOP plan for these companies went very successful, that the people are wanting to, get associated with that particular company. So this is the mindset that we have seen with people, that people ask that what is the ESOP plan with that particular company. So it is very important to, to get connected with the employees for all these terms and things. Now, so next thing will be the post IPO execution, that is clear unlocking the value of the IPO by ESOPs. So what is the company is required to do at this stage to make shares very, to make shares tradable and in compliance with the regulatory authorities. So the first, the company is required to secure in principle approval from the stock exchanges. Okay. So before rolling out any ESOP grants, obtain in principle approval from the relevant exchanges to confirm that the all the resultant shares will be eligible for listing once exercised. Okay. Now, the next step will be the listing and trading of ESOP shares. So the company has to, list the shares across the exchanges where the company is listed, providing full liquidity to option holders. Now the shares are listed. Now the employees can if they want to sell the shares, they can easily sell the shares. If they want to hold the shares for a certain period of time, there is no restriction. They can hold the shares for a particular period of time, and with the financial upside or any future growth that they see with the company, they can sell the shares and get the full benefit. So this is as simple as that, but we have to make sure that it is compliant, all the applicable regulations are followed, and employees stay informed, and communication is very powerful. That's it. Now talking about the taxation stage. So Aditya, please brief us that what are the tax incidences for the employees from the employees' point of view. Yeah, over to you, Aditya.
Yeah, sure, Saloni. So
Yeah.
basically, once the IPO has been executed and the now employee wants to exercise and unlock their ESOP value, so there will be a point of taxation for employee to actually get the benefit out of ESOPs. So there will be two point of taxation for employee at one at the stage of exercise and second at the time of sale. So we know that at the time of exercise, ESOPs is given to the employee while being in the capacity of employee of the company. So the benefit which is earning while being the employee is taxed under the salary head as perquisite tax. So the perquisite value is nothing but the difference between the fair market value or the current market price as on the date of exercise and the exercise price paid by the employee. So this is the difference which he is earned as a perquisite value, and the tax which he is going to pay on that value is termed as perquisite tax. The second part of taxation will be levied on the time of sale, where the employee will sell the shares of the company and earn the capital gain. So the capital gain tax will depend. The capital gain tax rate will depend upon the period of holding. So if it is holding less than 12 months, it will be taxed as short-term capital gain. And if it is he is holding more than 12 months period of time, so it will be taxed as long-term capital gain. So there will be two point of taxation as we discussed, that at the time of exercise and at the time of sale. So this is all about from this session today. So just to conclude the final takeaway. So bottom line from this session will be building ownership before the bell rings. And talking about the strategic alignment through ESOP, so we know that ESOP is just not a compensation mechanism, but it is a strategic lever to align leadership, foster retention, and definitely increase or build the organizational credibility before IPO. And also, if it is thoughtfully designed and transparent, regulated, and also communicated to employee, it will definitely bring a sense of ownership to the employees, and employee will inculcate their mindset to act like owners even before listing. So now I ask Saloni to put a closing note on today's session and provide us the takeaway from this session.
Yeah, sure, Aditya. So to add here, we have understood with experience that India's most inspiring IPO stories share a common thread. They build ownership early. So they empower their teams to think and act like owners. So big companies and big names in the market, so they give employees the the benefit that okay, you are the shareholder of the company. So they start very early. So they start before the listing part. They okay, we appreciate you and we recognize you before the listing only, that you will be with us for a very longer period of time. So, what it embeds a sense of shared purpose and accountability into the company's DNA. So, when this mindset is cultivated, the ringing of the bell is no longer just a market event. It becomes a celebration of collective achievement of every team. So every employee stands not only as a contributor but as a co-creator of the company's legacy and future. So this is all about companies that are pre-IPO companies that are going for ESOP implementation. So that brings us to the end of our session on how pre-IPO companies can structure their ESOP plans to drive the meaningful growth. So a well-designed ESOP plan not only supports wealth creation, but also reinforces corporate governance, aligns with shareholders' expectation, and contributes to the company's long-term success. So yeah, thank you everyone. Yeah,
Thank
thank you
you.
so much.